everyone. I did just film this, but the audio cut out, so filming it again, but here we are. So this video is talking about how candlesticks work, how they open, how they close, and what it all means basically. So when you first load into TradingView, where you see all your assets that you're trading, you will be greeted by these green and red candles. Green are bullish candles, red are bearish candles. So I'm going to give you, I drew out an example, some examples here. So pretend this is a bearish candle, the red ones. So basically this line here for a bearish candle is where it opened. And this line here, the bottom of a rectangle, is where it closed. Top of a rectangle open, bottom of a rectangle close. And it's the opposite for a green bullish candle. So if pretend this was green, it would be open here, close here. But this is a bearish example. And then you're probably wondering, what are these lines here? What are these lines? They're called wicks. And what they essentially mean are where price went within the time frame but did not close at this point. So let's pretend this is a daily candle. So it takes an entire day to open and close. You have all of these different time frames. You have 1 minute candles, 2 minute candles, 3 minute candles, all the way up to like monthly and yearly candles. So they take, depending on what the number is, it takes that long to open and close. If it's 5 minutes, it takes 5 minutes to open and close. And then within that time frame, price moves this entire distance. So because this is a bearish candle, we know that we opened here at the top of a rectangle and closed here. However, within that time period, price did reach all the way up here, the top of the wick, and all the way down here, the bottom of the wick. However, it did not close at these points because we know that it closed in a rectangle. However, it just signifies, it just shows us where price went within the time frame but did not close there. So let's have a look now at a live example. We'll go to the 1 minute time frame. This one's got 34 seconds left before it closes. So let's just watch it and see what it does. So we know that it opened here and it's currently down here, but it did come up here at some point and it's left the wick behind. Look, watch it. It's down here currently and it moved back up, so it left the wick, moved back up, left the wick. You see that? But it hasn't closed yet, so we'll see where it closes. 4, 3, 2, 1. So that's a perfect example. We opened here, we came up here at some point, and we came down here at some point and closed here. And it left a wick behind because we did not close at those points. This one would look at one more example. So we opened here. I'll just let you guys watch it. It's left a wick behind. You see how it's moving? It came down here, didn't it? And then moved back up, so it left the wick behind. And it's got 10 seconds before it closes yet. Doesn't look like it wants to move anywhere else. Okay, cool. And it closed here. Opened, came down here, but didn't want to close down here, and closed back up here. Now, let's have a look at so you're probably wondering what makes a bullish candle and what makes a bearish candle. So let's focus on this green up bullish candle here. So we know from our drawing down there, because this is a bullish candle, we opened here, price came down here at some point, came up here at some point too, but we closed here. Okay, notice where we close, and wherever we close, the following candle will always open at that point. So this bearish candle opened here, and we came down, and because we closed below the closing point of a previous candle, this makes this candle bearish candle, a downward candle. And then notice where we closed here, so the next candle will always open there. Then look, it came all the way up here, but closed here. However, it closed above the close of the previous candle, which makes it a bullish candle. And this candle closed here, next candle opens at the same price, came down into this wick, came up, and we closed at the top of a rectangle, which is above the close of the previous candle, making it bullish again. Closed, next candle opened, and we closed above the close of the previous candle, which again makes it a bullish candle. Next candle closed here, next candle opened at the same price, obviously, because we know that always happens. Came up, closed up here. Closed here, so the next candle opens at the same price. However, this candle closed below the close of a previous candle, closed, because it's a bearish candle, it closed down here, closed below. So let's say this is on the hourly time frame, so within an hour, when the hour was up, we closed down here, which is below the close of a previous candle, the previous hour's candle, closed below it, which makes it a bearish candle. And so we opened at the same price where the previous candle closed at, opened here. The following hour closed above the close of this candle, which makes it bullish. And then next candle, so this closed here, next candle opened, we closed below the close of the bullish candle, making it a bearish candle. Open, closed below the close of a previous candle, making it bearish. Open, closed below the previous candle, making it bearish. Next one, opened, closed below again, bearish. Open, closed below again, bearish. And this candle is still forming. It's got 32 minutes left of the hour. So it closed here, so opened here obviously, and it's currently green because we're currently above the close of this. However, this could all just be a wick and we close below here. Who knows in 32 minutes time? We are unsure of that so far.